Is IGCSE Accounting, May 2024. Let's look at the requirement of the question before we dive into the details. Requirement A, prepare Ahmed's rent receivable account for the year ended 31st December 2023. Balance the account and bring down the balance on 1st January 2024. Requirement B is about disposal of office equipment, so prepare the disposal account. Requirement C is to complete the table by placing a tick to indicate whether each amount of spending on the new inventory storage space is capital expenditure or revenue expenditure. Requirement D is to complete the table to calculate financial ratios, rate of inventory turnover, current ratio, and liquid or acid test ratio. And requirement E, the last requirement in the question, is about rate of inventory turnover for 2023 lower than 2022. Suggests two problems which may cause lower rate of inventory turnover. Okay, let's begin. Ahmed owns a trading business. He prepares his financial statements to 31st December each year. So financial year end is on 31st December every year. Ahmad had some unused office space and he decided to use some of this to store inventory and to rent the rest to Bilal. Okay, so he would rent to Bilal. On 1st January 2023, Bilal started renting the office space from Ahmad. So start rental on 1st January. The annual rental charge is 4,800. During 2023, Bilal paid the following amounts of rent into Ahmad's bank account. So we are recording for Ahmad. When Ahmad received this payment from Bilal, Ahmad's bank account will be debited, right? Whereas the rent receivable account will be credited. So we will credit here, credit with the details bank of 3,600, this amount paid by Bilal. So credit from rent receivable account to debit Ahmad's bank account. The double entry of the bank account is not shown here, not required in the question. On September 30th, again, Ahmad's bank would be debited. Therefore, double entry will credit this rent receivable account with 2,400. Okay, so take note, the annual rental charge is 4,800. That means in the income statement for Ahmad, the rental revenue or rental income received by Ahmad is 4,800. Therefore, rental income is credited in the income statement. Over here, we will have a debit entry. 4,800 is a revenue in the income statement. This should be rental income is credited in income statement, therefore double entry we debit over here. So with that, we have taken into consideration all information about rental, the actual rental amount for the year, the bank payment received from rental income. Now with that, we can close our account, sum up the total on the credit side, we get 6,000. The account must balance on both sides as 6,000. And the missing or balancing figure, that's the balance carried down, which is rental received in advance on December 31st. Bring down to the following year, year 2024, January 1st is a balance brought down of 1,200. This is the rental received in advance by Ahmad. Is a liability. Alright, so let's look at the marks allocation. 1 mark is awarded for the actual rental expense correctly debited here. If both of credit entry for rental received is correct, 1 mark is awarded. And the closing balance brought down if correct, another 1 mark. That's a total of 3 marks. Let's look at part B. Ahmad sold old office equipment for $1,350 on 3rd January 2023. Take note, this is the disposal price and this is the disposal date. On credit to Rahat. Rahat has taken all of his equipment from Ahmad on credit terms. Rahat has yet to pay. The equipment had been purchased for 3,200 on 1st January 2021. So the original cost of the equipment is 3,200, right? It was purchased on 1st January 2021 by Ahmad. Ahmad charges depreciation of 25% per annum using the reducing balance method. So take note, depreciation is using the reducing balance method. He does not charge depreciation in the year of disposal. This is also important. When the office equipment is disposed, right, the office equipment account will be credited. So the cost of the office equipment will be credited from the non-current asset account to debit to the disposal account. And disposal happened on 2023, January 3rd. Okay, so the asset office equipment will be credited to debit here. Disposal of office equipment will debit with this piece of non-current asset. And the cost is 3,200. Just to give you an idea, there will be office equipment, which is the non-current asset account in Ahmad's book. He may have this and other equipment with the balance brought down on this side, any amount, right? When Ahmad disposed this old equipment, there will be a disposal of office equipment, and this particular office equipment, which costs 3,200, will be credited. After being credited, it will debit here to the disposal account. So that's a double entry. This is the non-current asset account in Ahmad's book. We are not required to show this. We are only required to answer the disposal account. But this is just explanation than to see the double entry. Okay, let's put this aside. So now we'll check how much is the depreciation for this particular office equipment that was bought on 1st January 2021. When it was newly bought, it will be depreciated based on the purchase price. Depreciation will be 25% of 3,200, which is $800 depreciation, right? For the year ended 31st December 2021 until 31st December 2021. In the following year, 1st January 2022 until 31st December 2022, this equipment will continue to be depreciated using the reducing balance method. That means we take the cost minus the previous year's depreciation, then multiply with the depreciation rate. So for year end December 2022, the depreciation will be the 600 depreciation here. So the total depreciation until 31st December 2022 is 1,400, right? When this particular old equipment is disposed on 3rd January 2023, there's no depreciation charge, right? So this total depreciation is in Ahmad's record. Now that this asset has been disposed, we will remove the depreciation by crediting the disposal account. So 2023, January 3rd, provision for depreciation of office equipment will be credited with 1,400, right? And Rahat has taken over this particular equipment at 1,350, but Rahat didn't pay through bank. Rahat is a accounts receivable. So we'll take note of Rahat here, 1,350. All right. So let's check. Is it a gain or loss on disposal? Let's sum up this disposal account. Total is 3,200. It must balance on both sides. The sum on the credit side, you can check with pencil. Sum on the credit side is 2,750. Balancing figure is loss on disposal. So put the closing day here, which is December 31st. This loss on disposal will be charged to the income statement as an expenditure. So it's a credit here to be debited to the income statement. Right, let's look at the marks allocation. 1 mark is awarded for the correct debit of the cost of the old equipment. 1 mark is awarded for the correct credit details on provision for depreciation. 1 mark for the disposal price and correct details Rahat as a trade receivable, and 1 mark for the loss on disposal charged to the income statement. And if all dates are correct, 1 mark is awarded for the dates. So that's the total of 5 marks for part B. Let's continue to part C. Now you have to complete the table by placing a tick to indicate whether each amount of spending on the new inventory storage space is a capital expenditure or revenue expenditure. Painting the walls of the storage area is considered a revenue expenditure because it is something like a routine repair maintenance to help preserve the condition of the building. It does not add any storage capacity. Shelving for the storage area is considered a capital expenditure, part of furniture and fittings, right? Installation of the shelving, this is capital expenditure. So it's first time installing a certain structure, it's a capital expenditure. Light fittings for storage area is a capital expenditure. This will be about the wiring. Light bulbs will be considered as a revenue expenditure. Okay, let's look at marks allocation for part C. 1 mark allocated here, painting up the walls of the storage area. If all these 3 are correct, 1 mark is allocated, and 1 mark is allocated for light bulbs of storage area. That's the total of 3 marks for part C. Next, let's look at part D. Information for part D starts here. Ahmad's ledger accounts at 31st December include the following balances. So on the closing day, 31st December 2023, they give us opening inventory 9,000, and the rest of these cash, receivable cash, payables, bank overdraft should be closing balances. And Ahmad's inventory at 31st December is 12,130. So just take note of this closing inventory is this amount, right? His purchases for the year ended 31st December. Purchases for year end is 97,000, right? So with that, check the rate of inventory turnover times. So bear in mind, to compute rate of inventory turnover, we need cost of sales and we divide by average inventory. Okay, so let's check cost of sales. Cost of sales will need opening inventory, add purchases, and then minus closing inventory. So we take opening inventory value 9,000, add purchases 97,000, minus closing inventory 12,130. Divide by average inventory, we take opening inventory 9,000, add closing inventory 12,130, and divide by 2. So we will eat into the space here. The working will continue to show the cost of sales at 93,870, divide by average inventory 10,565, 8.88 times. Okay. Current ratio, we'll take the total current asset, total of current asset, divide by total current liabilities. So current assets, we have receivable, cash, and closing inventory. Let's sum up the total current assets. Current liabilities. Current liabilities are payables, 5,500, and bank overdraft, 640. So the current ratio will be 3.01 to 1. Liquid or acid test ratio will be current asset minus inventory. Or total current asset exclude inventory divided by total current liabilities. So in this case, our total current asset is 18,485. We deduct the inventory, 12,130. Divide by current liabilities, 6,140. Asset test ratio is 1.04 to 1. All right, let's look at the meaning of this ratio. Rate of inventory turnover, 8.88 times, means the inventory comes in and goes out of the business 8 to 9 times in a year, right? From the inventory arrive until it's being sold off and a fresh stock is ordered to replace the current stock that's been sold off, it is 8 to 9 times in a year. So higher inventory turnover times, inventory is selling faster, selling better. Lesser or lower inventory turnover times, that means the inventory is taking longer time to be sold off. Okay. Current ratio of 3.01 to 1, meaning if the current liabilities demand $1 now, Ahmad's business has $3 to fulfill that current liability. If current liability demand 1,000 now, Ahmad's business will have $3,000 to meet that. So no problem in meeting current liabilities in Ahmad's business. Whereas liquid or acid test ratio will look at current liabilities that has more immediate needs to be fulfilled. Generally, current refer to less than 1 year, but liquid or acid test ratio will look at anything that is more immediate, can be short time frame than 12 months. It could be this month or this week. So if there is this need to meet this immediate obligation, Ahmad's business is able to meet. So if there's immediate obligation to pay out $1, Ahmad's business has $1.04. Right? So if immediate liability requires 1,000 now, Ahmad's business has $1,040 to meet that. So liquidity wise is also in a good situation. Let's look at the marks allocation. 1 mark is awarded for the correct cost of sales and 1 mark for correct average inventory. And the correct final answer here is 1 mark, right? Correct working for current ratio is 1 mark. Correct answer is another 1 mark. Correct working for acid test ratio is 1 mark, and correct answer is another 1 mark. That's the total of 7 marks for part D. Right, part E. Ahmad's rate of inventory turnover for 2023 was lower than 2022. If this is 8.88 times, right, 2022 may be more than that. It could be 10 times higher than 8.88 times. So inventory in year 2022 sells faster. Inventory in year 2023 sells slower. That's why inventory turnover is lower. Suggest 2 problems which may cause Ahmad's lower rate of inventory turnover. This is the sample answer. Each correct answer will be awarded 1 mark to a maximum of 2 marks. Right? So if you give good answers, more than 2, you're still awarded a maximum of 2 marks. So any points that is valid, reasonable, that may cause lower inventory turnover, that may cause inventory to sell slower, may be accepted. That's the end of the question.